Markets bouncing up into their first resistance level. Is gold finally entering the inflation trade? Plus, adding to last week's portfolio trades, if there's more bullish confirmation, while also taking profits on the growth stocks that have already put on solid gains for the month. That's what we're covering this week in your report. Gary, how are you?
Yeah, no, I'm excellent, Chris. How you going?
Very well. And I thought we probably should introduce those who are new to the channel, that we're covering the leading market themes and their top performing companies. And on Tuesdays, like today, you're covering the portfolio trades that you've put on with technical analysis of the indices as well. And then Fridays, we break down the top charts of the momentum and launchpad list. So if we jump into the NASDAQ, your June-July target, well, that was met and it's now rising. What's that resistance nearby on the NASDAQ?
Yeah, so just looking at a couple of lines there, obviously looking at the last little minor swing high and looking at maybe that upper channel line as well. So still think, we'll get a bit of a bounce here. Just, we saw some early signs of strength there, some better volume, obviously, than we've seen in the last two rallies. That was probably, that and a bit of our cycles were, suggesting we'll see a bit of a rally to August. So still think the NASDAQ here can rally a bit further here, but just might slow down the market here. It sort of feels like it's going to be a bit of a, I think we might have mentioned 2 steps forward, 1 step back type of move here. So just might be a little bit of a grind high there, but still expect it to sort of, get a bit higher there and go back to that, that last sort of swing high there.
So that's the NASDAQ sort of coming into that, towards that swing high. What about the S&P 500? So that's similarly, you've put in this week's report that that's seeing some volume as well. So is that getting volume into this rally?
Yeah, so it's actually now sort of broken above that last swing low. So the last few weeks it had actually stayed below that level, which I think was sort of different from the Dow and the NASDAQ. So, but yeah, again, there's been a bit more volume in this rally, a bit more participation. So I just think we'll see a bit of a rally. So maybe looking for this rally go back up to 4.2 or maybe the top of that channel line there. But yeah, we'll just sort of see how it moves into there. But yeah, I think it'll sort of grind higher here. Yeah, just up into sort of in that sort of mid-August sort of time frame here. So yeah, look, sometimes they can be, the thing about these bear market rallies, sometimes they can be, quite short and sharp. But I think this one will sort of be a bit more of a grind. But you never know what you're going to get with these bear market rallies. Sometimes they can surprise you as well. They can be a lot stronger than you anticipate.
Well, something that could be stronger than we anticipate and haven't seen for a while is a gold rally. So you've put the spot gold chart in here, and that's the weekly chart. So we know that massive rally that happened back. Well, the commodity super cycle, we had a good run then, but 2019 was a pretty strong rally. But since sort of those COVID years, it's kind of got this sideways channel, has it? What's happening?
Yeah, that's right. So look, it looks more like a sort of a typical ABC there now. So you're sort of your first leg down, go back for a retest of the high, and then come back down to the bottom of the channel here. So it's sort of fulfilled that now. So that's the most common type of corrective pattern that you see in markets. So that's pretty interesting here. I mean, to me, one of the more interesting aspects of sort of gold is that if you look historically at high inflation periods. So I mean, the 70s was a cracking period. Obviously, a decade of high inflation. So I think we even put a little little performance sort of tab in there from the 70s there, which showed that obviously energy was the best performing sector throughout the 70s, and the second best performing sector was precious metals. So it's interesting here that we've had obviously we've got high inflation here, but precious metals has totally underperformed, if not been one of the worst performing sectors. So that's a little contrary to historical times. So why is that? I mean, a lot of people are arguing that obviously Bitcoin is the replacement there. I mean, I wouldn't put my money in Bitcoin as a hedge. I just see that as a very speculative instrument, and I think with 18,000 coins out there and 17,999 of them probably having no use, there's probably there's too much risk in there for me. So but I think it's just the gold's really interesting. Just sort of come back down the bottom of the channel here, just yeah, this could be a really key area here. I just noticed a few of the gold stocks were showing a little bit of relative strength as well versus the gold. So I noticed historically there that if the gold sort of gold stocks will lead the gold price, and then the like the oil stocks will lead the oil price. Oftentimes, and it's like, you'll start if the oil price starts to sort of weaken, you actually notice where the oil stocks would have started selling off before the oil price come up. So just know here that the stocks in the sector will often lead the commodities. So I just noticed a few of the stocks were showing a little bit of strength, and just a little bit of something sort of off the low there. So just key zone here. So it's just a sector to really keep a close eye on here. Totally underperformed in I guess in a market, type of environment where it normally should be performing. So yeah, I mean, I saw someone saying the other day that maybe you should be short other resources and long gold here. But I mean, now that I guess most other resources commodities have come off already quite a bit. So yeah, but I just think the gold stocks gold sector is worth having a look at here.
Well, we'll have a look at some of the gold stocks that you've put into this week's report in a minute. But before we move over to it, you've also got the Australian index. So the Aussie, it's a bit of a confluence here. So what are the markers that you've got on the chart that are coming around that old 2007 high? What are these red and green lines?
Yeah, so look, we've obviously had a pretty deep correction, which is big for Aussie market, and sort of right into our sort of timing there, which is great. So we're having a bit of a bounce here now. So I think there's some positive signs there. We've just got a few resistance levels here. So we've just got a few fib levels. We've got the 2007 old high, which is, sometimes those sort of old highs and old lows can be important levels of resistance or support in the past. And we saw on the way down that was the case there. It's sort of on the A leg. Yeah, so just got to watch that a little bit. But yeah, the market needs to sort of get out of this range here. If it's going to sort of have a bigger move, really needs to sort of break out of that channel and break above that old high there. So just really approaching our first sort of resistance point here. So if we are going to have a rally into sort of mid-August, we probably need to get above there. So not out of the woods yet for the Aussie market. I think it could be a bit of a struggle there, but I think it can grind through there, but it does need to sort of break that level.
Okay, so that's a good target to have on the Aussie. If we move to your trading shares, TWE is one that you mentioned last week, and it was great on the channel. We had some feedback for those who are in the wine industry that were doubting the ability to pass on the price rises to consumers. They were more worried about the Chinese exports, and rightfully so. So we want to thank the listeners and viewers for their support and feedback on that, and welcome if you've got insights on the industry, or please put that in the comments below. But you've still got Treasury Wine Estates, TWE, as a chart here. So from a technical perspective, what's the bullish break, this little pop above that down channel, downward line? What's this technical break say to you?
Yeah, so we've just sort of, like the two things that are important here is that that's been a pretty time-consuming decline there, and it's been more of a sideways move. So it's been what I call a corrective decline. So it's not impulsive, not breaking down hard. Just, and that's held up pretty well in a market which has been pretty weak. So the stock's showing, relative strength versus the overall market. So we have technically just broken up through the top of that band, which I think is a bullish technical sign. I'm not as bearish as some of the other viewers there around sort of China stuff there. I actually, I think that, we've already sort of seen that we're moving into other markets there. So, yeah, I think sort of, I think sort of Europe and other markets there will be much more open with pushing through there. So yeah, it's I guess wine's a little unique, as a product in that most products that sort of don't get used in a certain time frame, they go off the shelf. They're now worthless. So
those expensive iceberg lettuces, if they're not
yeah,
sold.
Yeah. So wine's a little different. So it can actually sort of as it ages a little bit, it can actually be worth more money. So I know every industry has got their own little idiosyncrasies. So it's but look, I just think this looks pretty positive. I just technically it looks to have held up a lot better here. So I've added to my position here this week. I think it looks positive. So yeah, I'd like to see a bit more volume come in there, but just the fact that it's been, shows some relative strength, and the fact that it's breaking through, and the fact that I personally like the sector here. I think it's I do think we'll be able to pass on. Some industries will find it more difficult than others to pass on the costs. I just don't see it. I think we'll all keep drinking. That's one thing. It's obvious to me. With the
more consistent in the downward markets, isn't it?
Oh, look, if our beers cost another 30, 40 cents each, or the glass of wine's another 30 cents or 20 cents more, they're not going to stop us from, I don't think it's going to slow us down. I think other products may be a little bit less inelastic. If the price goes up a bit, might slow us slightly. Alcohol, I just don't think is one of those periods. And if we are going to go through some tougher times, it is going to be viewed, as a recessionary type of stock as well, because we typically, what I say, we gamble, we drink more, and probably eat more when we're in tougher times. There, probably we just eat out less. I guess we might eat more at home. So just, look, I'm not sure we're heading for a recession, but I think it's falls into the positive basket if we are.
Okay. Well, if we're not heading into recession, there's a high beta play that could be working in your favor. You've picked out one, JHG, which seems to be that high beta side, their exposure to markets. So why exactly is that high beta, and what's the chart appealing to you?
Yeah, look, it's had a massive decline there on the weekly as well. So I think we had the weekly in there last week, and I've just sort of drilled into the data here to sort of have a closer look at So just notice that that the decline has really slowed down there. We sort of saw there over July that the volumes have really just dried up as well. So we just didn't see, for a trend that's sort of heading down here, we saw that just less participation towards the end there. So just tell me that sellers are sort of dried up here, and then we've sort of popped up out of that range. We saw some pretty good volume here, and if you've been looking at European markets, I know it's very doom and gloom over there, but the actual equity markets have actually held up so much better than some of ours. And I know there's a lot of energy stocks in that the FTSE European markets there, but the day equity markets have been pretty robust. So Janus Henderson's probably underperformed the actually European markets there, and that's their sort of their sort of key markets there. So look, technically it looks pretty bullish. I think if you look for a bounce in equities, which I think is underway here, then we just got a few good signs there. So this one's definitely a bit of a high beta play. It sort of tends to if the market's up sort of 5 or 10%, it'll probably be up double that, and if it's down 5 or 10%, it's probably down double that as well. So you do get a bit of in that. So that's the only risk with a stock. But if it's all about managing your risk at the same time as well. So everything I'll have here, I'll have a stop in place anyway.
Okay, we'll move through onto those gold stocks now. You mentioned that the gold stocks, equity stocks, the gold equities tend to sort of lead the gold price. So what's happened here with Newcrest? This is the weekly chart, and you've got some timing here. So what's critical about the timing?
Look, there's a few things. I mean, obviously, we've come back to we've probably done a large ABC correction there. So that sort of first leg down in 2020, and then a bit of B wave up, and then quite a hard-working sort of C wave. It's taken a long time to actually go down to a new low here. But that has sort of filled our sort of ABC type of pattern there. Come back to an old low there back 2018. So oftentimes they come back there. So did go marginally lower, which I think that's something I do look for. I'd like to go back to sort of marginal new lows and then turn here. And Newcrest just had an update as well there last week there, which I think was in this market sort of important to have that behind you just to sort of see how the company's tracking. So the update was reasonably positive there. So and because obviously some of the gold producers have been a few mixed performances there. Some of them have been able to keep cost contained, and others haven't. Others sort of increased, and some have had declines in the production. So just important to sort of have a bit of certainty there around them as well, just because I think, with reporting season here, just, there's sort of one of the markets there with a lot of companies not providing guidance previously and then coming into, reporting season there where they're full of anticipation, full of potential issues. It's nice to sort of have that little bit of certainty there. So I just thought Newcrest looked pretty interesting here. From a timing point of view, it's gone 13 weeks from the last high as well. So like a lot of moves will sort of run that 3 months or 90 calendar days, sort of high to low or low to high. So there is some timing for this low here that I like to see, particularly within commodities. But more importantly, we saw a bit of volume come in, a bit of buying off that low. So just needs to sort of hold this low. I think it's pretty interesting to me down here because if you can buy it sort of pretty close to that low and have a really tight stop on that, then we're not risking too much. And where if it does sort of bounce here and recover, then the upside risk or the upside target there could be quite substantial. So good little risk reward here. I've just sort of started with a small starting position there. I just think it looks pretty interesting here.
That's a good trade to take to it. And I think there's been some reports about since 2016 coming out of the Australian reporting cycle that you're talking about, those who sort of beat estimates, beat the expectations. On average, they increase about 7.5% over the next 4 months, whereas those who don't are down on average 7.5%. So is that what you're saying? Like that, it's critical to have, or it really helps in this market to have that update where it's been positively received from the street? Is that?
I think in this market, 100%, Chris. I think that's the biggest risk that I sort of see here at the moment as a trader and investor is reporting season. Because this is probably, I'm not usually too afraid of reporting season here, but this is probably one of the most tricky ones I've seen for a long time, just because a lot of companies haven't given guidance because of COVID. And because we've sort of had COVID and we've had inflation here and rising costs, there's a lot of things that could have a fairly decent impact to each business there. So how they're handling that as well. So supply shortages as well. So it's just there's a number of categories there. If you're not a well-managed business there, you could come a cropper here. So I just think this reporting season is going to be one of the trickiest ones I've seen in a long time. So having companies who sort of come out and give guidance early, give clear guidance and see how they're tracking, that's good. That's sort of like, okay, I feel more comfortable investing in there because it's sort of we're updated, so post, it's the not being updated, not knowing where they're sitting. That's when it can be tricky there. So so I think it'll be a really interesting reporting season ahead, but it could be tricky times ahead. But it's just nice to sort of see companies, even if you report poorly, give a poor update, and then the stock gets sort of slaughtered for a while, and then after a month it might sort of settle down. At least you've sort of, okay, the bad news is out there, then maybe we can trade it now after it's sort of sold off sort of, much more deeper. But you're right, if you get a good result, you tend to push on, and then you sort of, usually tend to sort of grind higher. And then if you get a bad result, you get sold off, and then you tend to grind lower for a while. So that's definitely a high probability. I think that's definitely the case.
Yeah, well, good mindset to have going into the reporting season. On the other gold front, you picked up Northern Star, which into this week's report. It's a notably different chart, understandably still looking at the weekly chart, but this seems to be sort of congesting down the bottom, a bit of a basing phase, or what would you call that on NST?
Yeah, so it's come back near a big technical level on the weekly zone. They're just not quite there. I think back to might be in the 38. Sort of Fibonacci sort of range there, but I love that sort of this is a fairly large decline here off the high. And then the last 2 weeks there, it's really sort of slowed down into what I call like an overlapping trend there. So we've had this little sort of consolidation there and sort of tighten up there. And, we've seen the volume sort of dry up a little bit into that sort of downward move. And then we saw, what we call like almost the little sort of tennis ball moment there, sort of, we've sort of sold off and then recovered quite strongly on big volume. And then we've had 2 big volume days follow. So that's sort of, it's sort of a creeping trend into a low there, come back to a big technical low, actually break out big volume there. This one actually, the one that really caught my eye actually. So technically this is one of the ones I thought looked the best there, just because that volume there, the volume was sort of out of the box, was probably double the volume of the previous sort of month there. So, and then we got 3 days there, bang, bang, bang. So, yeah, around the same time as that sort of gold washed out too, as well. So I just think this looks pretty positive again. Again, pretty decent sort of, if you can get set sort of on the lower side here, have a lower sort of, keep your sort of stop nice and tight here. So, look, commodities here, the commodities are moving big. They're moving up big and moving down big. So it's a real volatile market there. So you just need to make sure you've got your stops and target in place there. But it is a market that is moving quite large. So if you do get it right here with a pretty tight stop in here, I think there's a reasonable rewards around.
That's a good one. Like what you've become famous for is getting those really good low risk, high reward trades. An indication that you've picked up again for another stock is BVS on high volume. So what's this heavy volume? Why is it so critical at this part for BVS?
Yeah, I just sort of thought, look, stock's sort of been in a pretty heavy downtrend. So I just sort of one that I've monitored the last couple of weeks there. So just looks to be sort of breaking out of that sort of downtrend. So look, it's tough on that. It's obviously more of a growth stock in that sort of technology sort of sector there. But at the end of the day, we've had quite a few other tech stocks that have actually popped out and had some good runs here. So this one here is just sort of poked its head out of the downtrend there, and just sort of breaking a little swing high as well, overcoming the previous little swing lows. So just there's some okay signs in there. So this might be one to sort of keep an eye on there. Might be building here. Sometimes when they break these downtrends, they can hug it for a while before they get going. But it's just definitely one to sort of keep an eye on here, I think, at the moment.
Okay, well, the next one you've got is Flight Centre, which is an old favourite of yours. You've traded fairly well now for a while, as it's had a huge amount of volatility post-COVID. Big drop, but massive swings. What's happening now on this bottom red line?
Yeah, just key level here, really. That's basically what we've seen so far. So I haven't really seen too much volume there over the last month or so. Volume's been sort of quite light there, even on the sort of way down as well, quite light as well. But it's just a big key technical zone here. So just wondering if we're going to bounce from here again. We want to sort of see a bit of something. I guess we want to sort of. So I noticed I had a little bit of an upgrade there. So I had a bit of a bounce here, but it had sort of weakened back off again. So it is sort of struggling to get going here. So just critical here that we find some support here. I mean, I quite like the stock here. I think if you take a longer term view here, I can see it sort of going back to those sort of 24, I think is the old $45 level in terms of how many more shares an issue now. But that will take time, for the travel industry to fully recover. So, but already starting to get in some decent numbers there across a number of the players there. So, I think it looks pretty interesting here. But it just needs to show a bit of something here. It just concern me a little bit that it's had a couple of tests of this sort of zone here now. We've had lots of touches of this line, which is pretty incredible. Normally you wouldn't get that many. We might get maybe 2 or 3 touches, maybe a 4th touch, But this has come back quite a few times here. So just a bit of a critical level for the stock. That's all.
Okay, well, another one that you've put in is Pointsbet PBH. Now, you noted this one a few weeks ago in the Momentum and Launchpad list that you ran through, picked out some charts that were looking positive for you. This seems to have progressed since then. So what is it about PBH that's made your weekly list or your weekly report?
What's triggered it for me is actually the volumes in there, Chris. So if you actually look at the volumes over the last few weeks there, they've been elevated. So we had a nice little pop in volume off the low. We saw nice congestion there and light volume, a little bit of a little pop, some good volume again, congestion again and light volume. And then the last 3 or 4 days on the way up here, some really good volume again. So, and then starting to break out. So break out of this little sort of small channel and then breaking above a previous little swing high as well, which I think is secondary. So we've got a couple of positive aspects there. So just got this overhead channel line on probably more of a weekly longer term pattern. But some interesting signs here. And look, definitely some risk with PointsBet, but It is, yeah. This is a potential high risk, high reward play here. I mean, they're really sort of. I mean, they spent a lot of money. They've really chewed through the dollars trying to get a foothold into the US market there. But they do have some pretty interesting alliances there. Have some good partnerships there. Trying to get really trying to get in a position where they can be one of the leaders in that US market there. So potentially, if they can be one of the leaders in that market, which is really just starting to open up here, because the regulatory changes that have come through there. It's just one to keep an eye on here. I just think this one, if it can get a foothold here and get going, this is one that could get some momentum. So it's the volume technically is one that's the one thing which is pretty interesting here. It's sort of starting to show something. That's what we want to see. So we don't see, there's no volume there, as we sort of highlighted before. You might get a move, but you don't get really, you don't get anything decent. The best moves, the big moves, is when you sort of start getting some volume coming in. So just some interesting signs there. We're starting to see some volume down here.
Nice. Well, there's some good trades this week. And if anyone wants to see and follow up on the Friday reports where Gary sort of talks about the momentum stocks and the launchpad working through his favorite charts, you can click on the right. And then also to update on a trading strategy, the false break in the springs, which is sort of mentioned today, you can click on the right there. Now, Gary, your details are also on screen. So if people want to discuss stocks, portfolios, that's the way to go, is it?
Yeah, that's right. They can reach out.
Definitely. Well, thank you again, Gary Glover from Novus Capital.
Thanks, Chris.